Money. Money.
Trump's eager to sign a bill rolling back Dodd-Frank regulations. The Dodd-Frank Act, fully known as the Dodd-Frank Wall Street Reform and Consumer Protection Act, is United States federal law that places regulation on financial industries in the hands of the government. The legislation, which is impacted in July of 2010, created financial regulatory processes to limit risk by enforcing transformation and accountability. Because of the Great Recession of the late 2000s was due in part to the low regulation and the high reliance of large banks, one of the main goals of the Dodd-Frank Act was to create more regulation. Now, the act created the Financial Stability Oversight Council, FSOC, to address persistent issues affecting the financial industry and to prevent another recession. By keeping the banking system under a closer watch, the act seeks to eliminate the need for future taxpayer funds bailout. The Dodd-Frank created the Consumer Finance Protection Bureau, CFPB, to protect consumers from large, unregulated banks. Now, in February 2017, President Trump issued an exclusive order that directed regulators to review provisions put in place by the Dodd-Frank Act and submit a report to potential regulatory and legislation reforms. Now, last Thursday, President Trump signed the biggest rollback of bank regulations since the global financial crisis. The measures designed to ease rule on all, but the largest banks passed both Chamber of Commerce and bystander support. Bankers say that the legislation will lift burdens unnecessarily put on small to medium-sized lenders by the Dodd-Frank Financial Reform Act and boost economic growth. Now, opponents, however, have argued that the changes could open taxpayers to more liability in the financial system, collapse or increase the chances of discrimination in mortgage lending. Now, the measures ease restrictions on all but the largest banks. It raises the threshold of $250 billion from $50 billion, under which banks are deemed to important to their financial system to fail. Now, those institutions also would not have an undergo stress test or submit so-called living wills, both safety values designed to plan for financial disaster. Now, it eases mortgage loan data reporting requires from overwhelming majority of the banks. It would add some safeguards for student loan borrowers and also require credit reporting companies to provide free credit monitoring services. Now, Republicans have made cutting regulations one of their top priorities since Trump took office, but Democrats, who largely support the Dodd-Frank reforms, helped to get the bank regulated bill through Congress. Now, personally, being in the mortgage industry, Keelan and I both, there has been positives, strengths, and negatives and challenges and positive things that have came from the Dodd-Frank Act, really protecting the consumers. We have seen that, but there's also put a lot of gaps in the process that makes things a longer process. And then again, as I shared, it's made it a lot more difficult for the smaller mortgage companies. So it'll be interesting to see how all this plays out. And that was the Money Chat for today. Coming up next on the Money Hour, how to create an impact and gain more sales without saying a word. Kirsten O'Shields with Body Language Strategy System right here at 11:50 a.m. at KKNW after the short break.